Welcome back, everybody, to another episode of Fintech Fridays. I'm Brian Vieaux, President and Chief Operating Officer of FinLocker, and excited to have with me today David Maland from Noteflow. David, welcome to our podcast.
Thank you, Brian.
So we were connected by a mutual friend. We'll give Joel Winters a shout out. He'll appreciate that. He has connected me with a bunch of cool people and products and companies over the last few years. And Noteflow is a new one for me. So I'm excited to learn about Noteflow, kind of get a little bit of your background and have you share, a bit of the story of Noteflow and how you guys are kind of serving the mortgage lending and real estate finance industry. So let's start with who the heck is David Maland? Who are you and what do you do?
Okay. I'm the Chief Marketing Officer here at Noteflow, and I've been active in developing the new products for the mortgage industry that we offer. And we're offering some data transportation and tracking and features for the mortgage industry, particularly the default mortgage industry. And then we're also now realizing our full vision is that we want to be a marketplace. Now it's a marketplace for marketing, direct marketing. It's a marketplace for data. It's a marketplace for direct, integration. A lot of services wrapped around the industry because we're all working together.
Yep. So let's try to peel this back a little bit. So our audience is primarily folks on the front end. So we'll just say some of the people that may originate loans that ultimately make their way through to your platform on the default side, unfortunately. Mm-hmm. And what I like to do on these talks is really just kind of, deconstruct to the degree possible, kind of all the components of the mortgage manufacturing process. And one that we don't spend a lot of time on in this podcast, frankly, is the default side of, mortgage servicing. And,
sure.
I think a lot of our front end loan originators have a very limited, knowledge base on kind of what occurs and what happens downstream. Mm-hmm. And so for you all, you're effectively, when you talk about a marketplace, you're talking about, non-performing loans and maybe the assets associated with those loans and finding kind of potentially matching sellers and buyers of those assets in terms of the marketplace. But maybe we take it a step further and just start with kind of the nuts and bolts of how loans make their way to you all. Might be the best place to start.
Sure. I'm going to start a real high level now, Brian, and then we'll narrow it down as we go through this. So when I look at the marketplace, it's really the entire financial ecosystem, beginning at the monetary investors, the people who actually put up the funds as in funds, investment funds, as individuals, deposits in banks or savings and loans institutions, all the way to the end of the loan services. So that's our marketplaces, all of those touch points in between. Now that seems insane and crazy and big, but the way we approach it is we just really get fine-grained. Somebody wants a new service. Okay, let's talk about it. We'll get the default, set of instructions up in, maybe 2-3 hours.
Yep.
And then refine it, as we go along. So it's nibbling off that huge horizon, of the ecosystem that we incorporate. Now, also we look at the marketplace and are very true to the reality out there. I spent thousands of hours talking to people over the last 5 years about what do you need? What would make your life better? How can you be more productive? And when I look at their systems, they have either state of the art, just trailblazing technology, or lagging technologies that they have no intention of doing anything with.
Right.
And about 5 years, well, actually about 8 years ago now, but 5 years ago, some technologies of data integration and transportation were emerging that finally made this possible to integrate between these trailblazing and lagging technologies and synchronize data, not just API import export, but actually synchronize data across platforms, multiple platforms at one time, to get one version of the truth. And then reuse that data, because the zip code of the borrower, though it may be changed over the course of a loan for reasons, is always the zip code of the borrower.
Yeah.
But there's about 20 ways to store that.
Yes.
So if we normalize that data in the middle and then allow you to map to it and store it differently, even in your multiple platforms.
So let's take that down a layer real quick, because I think I have an pretty good understanding of the back end servicing kind of infrastructure, and most people may not realize. I think most originators, when they think of servicers, they think of the technology that powers servicers, and they immediately go to MSP, right? MSP is kind of the behemoth,
Sure.
market share leader. Sagent Lending Technologies, of course, has a piece of technology that they power servicers. But most originators probably don't understand, because you've said platforms a couple times.
Yes.
Most servicers have multiple pieces of technology kind of stitched together, bolted together, layered together, that make up the entire servicing experience.
Yes.
And oftentimes you'll have a performing servicing function, right? When everything's going great, people are making their payments on time. You've got the performing function kind of housed in a platform. And then when a loan goes off the tracks, goes delinquent, maybe 60 days plus, it moves off of that kind of performing platform onto typically a default platform, sometimes even to a default sub-servicer, another entity that picks that loan up and does the work. What I'm learning is your platform is going to be typically connected to that ladder, the default platform per se. And you're going to enable that servicer or sub-servicer to do different things like, tracking orders for foreclosure, eviction, loss mitigation, bankruptcy, title, valuations, property preservation, et cetera, right? That's kind of some of the core of what you all are doing. Is that fair to say?
In general, yes. Specific details is different, but what we allow is you to exchange data directly. Now we have systems that we communicate with right now that are attorney systems for default loan to default collections, and desktop systems at a loan servicer.
Yep.
And neither one of them leave their system to track all of the milestones and events and compliance in the process. So they don't even learn a new system. We just integrate the data into their daily routine, and the productivity gain is amazing. I mean,
right.
Even I'm surprised, and I thought it was going to be high, but I mean, we're seeing 600% more productive. So when you have the additional load, all of the extra things of the non-performing loans added to the performing loan work, they don't need any more people, because there's still plenty of time. They're just really looking for the exception where it's not working quite right, and deal with that one issue a day, and if it's working, it's working.
Right. And so your typical client is a mortgage servicer, probably B, mortgage sub-servicers, and maybe some other servicing related technology platforms, or are there others as well?
Well, law firms, are part of the thing. We have a lot of services, which we're building the marketplace for that,
Yeah.
and and then we also see a lot of loan servicers, fund managers, because funds may take a higher or lower participation in the closing of those, and it depends upon what kind of loan it is.
Yeah.
We see a lot of commercial loans right now,
Okay.
and they have a whole different management system, and it still works.
Yeah.
Going through us. So it's very easy to put a loan on and start tracking. And one of the things, if you have a higher touch client, like a fund, saying, we want to be more active, we have our way of doing this, then we share the information with the loan servicer so they stay in compliance.
Yeah.
Because the loan servicer is ultimately responsible for the collection of the debt. But if they're allowing, their fund to do more or less, they can. And it can vary by commercial loan or a conventional loan, or even non-conventional loan.
So on the marketplace, this is more curiosity than anything. Do you all have do you take on some responsibility around kind of vetting the players that are in the marketplace that on behalf of the servicer, or do they still have to do that on top of what you're doing?
We comply with the levels that we comply to. We can't over comply because that's not legal. We can't under comply because that's not legal. We have to have a level, and it is the responsibility of the purchaser of the process to do that. In the marketing area that we have, where we're an owner of a note or a servicer, we have a public area where you can go in and search for the services in the state and county that you require the service in.
Yep.
And it'll bring up a list of names. Now we have the ability to list good marketing material and your licenses in that, and it's becoming extremely popular.
Yeah.
Because again, it's a marketplace. It's open to the public. You don't have to be a member. You don't have to pay any fees to find the services you want where your property is located.
Can you give us some examples of some of those services that one would, kind of be searching for as it relates to these type of loans, and of course the properties that are secured by these loans?
There's it's just a cross section, because our service doesn't only work with non-performing loans. That's where you have these enormous productivity gains. But they work with reperforming loans and performing loans, and let me give you some examples that might go across the section. Is that you may want to have a property preservation. You just want to mow the lawn. Okay, it's 1,000 miles away, so you can't run over there and make sure it was done.
Yeah.
But the people at the property preservation take a picture before they start, a picture when they're done, mark it complete, and you're notified right away.
Got it.
You can also say, I need property tax payment services. So that can be arranged in our system. I need insurance. I need all the property preservation, boarding, repair, construction, all of the legal services, all of the, we're just moving into that upscale section where you're from, is the mortgage origination, because of the size of the non-conventional market.
Yeah. Yes.
And that was the trigger that got us started, is the non-conventional market is growing much faster than the GSEs.
Right. So that's actually a great place to kind of dig a little deeper, because I think that'll resonate with a lot of our audience. So when you talk about, we'll call it non-QM, right? Non-agency, jumbo, whatever you want. It's basically any mortgage product that is where the investor is not Fannie, Freddie, FHA, or VA, essentially. That's kind of what you're talking about, potentially?
In general, yes.
Yeah.
Yes. Yeah.
And so some of those investors may have specific requirements, right, around the property itself. And that's where your services can come into play in terms of those loans.
Sure. They can go in and they can order of evaluation, inspection if necessary, whatever the service is, and run them all concurrently.
Yeah.
To move fast. The conventional market says, "Oh man, this is why would somebody pay 3% more interest?
Yeah.
To get a loan over the weekend." Because I drove by the house, had a for sale sign, on Friday, on Sunday I closed.
Right.
And it's 3% more, and it didn't take them a week to pull the documentation together to make a conventional loan, or the time. Now, if you think about that from some of the higher tech jobs, a lot of the higher income people that are using these loans, I would have made more money working that weekend, or that week, than I could ever save in interest.
Right.
It's what, a couple $100 for every $100,000.
Yeah.
My bonus was $75,000. That was much more important than the interest over a 20-year loan.
Yeah, and there's another impact or another factor at play, especially in today's market with the lack of inventory. And so if you, to your point, if you can, as a buyer, move quicker on your acquisition of a home, purchase of a home, because you can close, in 3 days versus 10 days versus 30 days, that makes your offer more attractive, and you may trade a higher note rate for that, that competitive feature.
Yeah. And there's always refi later. So I mean, it's not a secret anymore.
Yeah.
But the time value is extremely high, and with our system, it's automated. If you need a title report as part of that, that's automated. It goes in, It gets done, it returns. What normally takes 10 days, we're seeing in 3.
Yeah.
By the way, it also has all the data elements, so you can use your AI or workflows to validate the data that it's compliant. So that all happens automatically before anybody looks at it. And it can even notify the customer you're approved, boom, next.
Yep.
Or notify your workflow or notify your other platform that you're using to move on to the next step. So those are the, we deliver the data, aggregate and deliver it, normalize it in the middle. So those automation steps in the systems you already have work. If you need a digital signature, works with our system. We're not selling you a new service, another service. You already got that.
Right.
You already got an accounting system. We can integrate into that. You already have all of these platforms stitched together, like you said, and companies are using us to communicate internally faster.
Got it. So the integration's really, it's more of a data integration, right? So you're moving data. Is that kind of the best way to describe it?
We're moving information. Okay.
Yeah.
And it's not a simple API import export. It's a synchronization, so that if I send it to your system, I send it to your system, I can do it at an API level.
Yeah.
But you realize today, in business today, 75% of the information moved in business today is done in flat files. And do you know how fast it is to integrate a flat file?
Yeah.
And by the way, one flat file can go to four my different systems, and I can just pull off the information I want. So if you want a flat file, you want API, you want, whatever, it's there. If you want to use our system to visually access the information, we're there.
Yep.
So we've gone beyond the limits of the system and said it's a marketplace.
Yeah.
Anybody can participate. You got a cell phone, I can take a picture of the dress that's cut.
Yeah.
So it's and then just sit back and think, it's like, how much time can I save? How many FTEs can I eliminate? Because that's going to be, part of the solution in the future.
Yeah, I mean, if again, for our front end loan originators who may not have as much experience and knowledge on, the full servicing spectrum,
Mm-hmm.
as a servicer, and we'll stay inside of the GSE space because it's a little bit
Mm-hmm.
easier to explain the difference.
Sure.
Fannie, Freddie pays the servicer, call it 25 basis points a quarter. Uh, per year to service
Mm-hmm.
a performing loan. Well, the cost when a loan goes into default, becomes delinquent, right? The cost to service that asset is no longer covered inside of 25 basis points of servicing,
Right.
right? So
Right.
it could be 3 or 4 or maybe 5x that base servicing strip. And to your point, technologies like Noteflow are going to help significantly reduce the cost on the default side, and over time probably change the dynamics between even the agencies, the GSEs, and servicers in terms of what that that default servicing fee is that
Mm-hmm.
the agencies pay.
Mm-hmm.
Much needed. It's super needed in the industry for sure.
What you just described, I could spend a day talking about, so I'm not going to go too deep into it. But you're exactly right. And what you're also going to find is that there's probably expertise and services that your marketplace can offer to the default or the performing loan market, or there's expertise there that they have,
Yeah.
or even selling the notes, because you don't always go through foreclosure. You may sell the notes to another investor, which
Right.
happens often, and there's value in that your people already have. They know the property. They know there's value that they can contribute and make revenue in the future, because
Yeah.
there's going to be less intermediary fees. You just said it. They just look for ways, the GSEs, and that drives the rest of the market. As they
Right.
drop their fees, other people aren't raising; they're going right with them. So,
Oh yeah.
we need to say, hey, my expertise is really valuable here, and I've been giving it away for 20 years.
Yeah.
Maybe it's time now I get a little bit of that by contributing it, to the marketplace. So I love to talk to people. I love to go further into this, because every point we've talked about, Brian, is, we we could spend hours on each minutia detail of it, because
Oh yeah.
when you think about it in such grand scale, the marketplace is both sides. There are buyers and sellers, and there's value on both sides. And there's a lot of people that have unrealized value.
Right.
So it's just terribly exciting. And we're just kind of in the backbone. We're just in the back. But we've a lot of these things where they say, well, we got to have an industry standard. No, a date's a date. There's 10 ways to store it, but a date's a date. So we've come about it at a different perspective and said, this is technically what we need. This is the dynamic scheduling and tracking that we need. How do we open that up and not limit it? We have a default schedule for hundreds of products, of services.
Right.
You have your own secret sauce, schedule and events. Great. Just when you get the order, just substitute yours in, and it's there. And that allows you the differentiation on your product that somebody else doesn't have. So
I love it. This is super helpful, and I have probably more than the average experience and understanding. But for our main audience, who again are mostly front end originators. We do have some folks that are kind of on the back end as well, but this has been super helpful to kind of a little bit of education around the other parts of the process that people may not have as much knowledge on. What's the best way for folks to get in touch with you, David, if they want to learn more?
Well, you can go to our website at noteflowinc.com or noteflowco.com.
Yeah.
Or not com, Noteflow Co. And you can just contact it. Most of the emails go to me, or most of the phone calls go to me. So,
and wherever anybody's watching or listening, this post, typically we push it out through LinkedIn. We'll tag Noteflow, and we'll tag David in there so folks can get in contact directly with you.
Yes.
Well, David, this was great. I appreciate you coming on and sharing your knowledge and expertise in this space. Love to learn about new companies, or new to me, new products and services that I'm not otherwise familiar with. And I appreciate you coming on. And again, shout out to Joel for connecting us and having you on our Fintech Fridays podcast.
Sure thing. Thank you, Brian.
And everybody else, we'll see you next Friday. Please come back and check out next week's episode. Thank you.